The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good Tuesday morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN. We kick things off in markets. We had a trade higher yesterday, a bounce, getting it all back and then some, and then we just traded below the lows. You talk about volatility, folks. From yesterday morning, you're talking about 130 points up, 140, 150 points down. S&P's off at 1.7% right now, off 120 points, as the possibility. You're talking about higher energy prices. You're talking about a war lasting longer than we thought. And markets reacting. S&P's off 1.7%. NASDAQ 100 off 2.1%. The NASDAQ 100, folks, at about 3 p.m. yesterday, about 25,100. Okay? You just traded down. You're talking about 730 points from that high to low yesterday. You talk about volatility. NASDAQ 100 off 2.1%. Just off the overnight lows. Dow off 895 points, off 1.8%. The Russell off by 2.5%. Folks, we got 23 minutes to go until the opening bell. And you are approaching the lows we had February 6th. Next stop's 2,500. In the Russell, you look at the S&P, similar action. Approaching the lows of where we were February 6th. You break below there, November lows are out there. They're hanging. And that's a low that's 250 points below where we're at right now, folks. This is a critical area. That's the low of December, just below where we were in January, and those February lows where you caught quite a bid. But yeah, you're talking about a low there of 67.51. So we're right there. We just hit a low right now of 67.42 in the S&Ps. You take a look at the volume. It was a nice uptick in volume yesterday. Already, we've done almost 500,000 contracts in the S&Ps. You jump over the NASDAQ, 206,000 contracts. Same thing. NASDAQ coming into the lows of early February. You check out the Dow, well below those lows, right? Dow in January, 48,092. So we're below that level right now in the Dow at 48,031. Yeah, now you're 5% lower in the Dow in about 3 weeks. How about that? S&Ps, you hit a high of 7,043. We're almost 300 points off of that price level right now. That's just about 4.25% off of the highs, the S&Ps right now. We jump over the volatility index. The VIX, 2589. Our man Steve Rhodes talks about that VIX moving more than 10%. Well, right now we're at 20%, the VIX. Yes, 20% off of the highs of 2730, but it's been quite an overnight session. We haven't even gotten to the best part. Okay, the best part is, and maybe the most important, you're talking about bonds. The 10-year right now, how about 4.11? 4.11. You take a look at the short-term action in this thing. When I was on the air yesterday morning, we were at about 4.02. You were at 3.95 last week. 15 basis points in the 10-year since markets opened Sunday night. 15 basis points in yield. The 10-year now 4.11. We talked about dollar strength. How's that for dollar strength? 99.26, folks. 99.26. I say it almost chuckling, as in the dollar is up almost 2 full points from where you were on Friday. And you better believe that that's weighing on metals, folks. Okay, we talked about it yesterday morning. And we got quite a pullback in metals. Gold off by 2.5% right now. You jump over to silver, off 7%. Silver just traded down almost $20 from where it was on Sunday night. It's 78.06. 78.06 is the low from the overnight session. There's your daily on silver. It's going to be a big day, folks. Okay, we've already done 63,000 contracts in silver, which is one of the highest volume days going back almost a month already. So get ready for it. Yesterday, you do 79,000 contracts, and silver's going to blow that out of the water. You take a look at the volume in gold right now. Yesterday, that was actually a trade higher, even though you get a red candle there. We gapped higher. Gold trades higher. Yeah, you put up more than 200,000 contracts for the first time in a while, but guess what? Today, if it holds, we're going to wipe that out, and look at what we're going to do. Okay, we're going to take out an entire week of trading, and you're going to destroy it on volume. Gold's already done 150,000 contracts. It's 9:10 a.m., folks, so get ready for some action in metals. You jump over to platinum. Look at this, right? Platinum down 8.7%. Platinum's going to take out everything we've done since February, and you're going to do it in volume in the last couple days. Take a look at the weekly on platinum. Yeah, you're potentially taking everything out we've done since February. It's basically the beginning of Tuesday trading. And look at all last week, you did 108,000 contracts in platinum. We've already done 46,000 contracts. It's Tuesday morning. We have 4 full trading days left. It's going to blow that out of the water with volume. Take a look at silver. Again, taking a look at the weekly. Put these on your radar, folks. Okay, when you talk about quality volume, man, you had a nice run up, but boy, things have rejected from there. You get a bounce on ever thin volume in silver. And now, last week, you did 303,000 contracts. We've already done half that volume by Tuesday morning at 9:10 a.m., and we've already engulfed the entire prior week in price. So the cards are stacked against the metals right now. It's been a heck of a run. Protect yourself out there. You got gold right now down 2.4%, and the dollar is saying it all. And the dollar is catching quite a bid. It's a dynamic shift, folks. Okay, we already had a little bit of strength coming off those lows, and now we're right back up to almost pushing 100, and that's going to be the area. You back this out a little bit. That's been the consolidation. The gold's been in, the dollar's been in for 11 months. Yeah, 11 months. You broke lower. Okay, but we're right back in that range, and the next stop's 100. You're at 99.29 right now on the dollar. Now, 2 weeks from tomorrow, we get a Federal Reserve meeting. All indications are that the Fed's going to stay right where they are. We have the March meeting. We have an April meeting. Okay, I believe it's April 30th is their April meeting. There's no May meeting, even though the new Fed chair, if confirmed by the Senate, will take over in May. And then if it's Mr. Warsh that's confirmed, as expected, his first meeting's in June. But you better believe things have gotten more difficult. Okay, so much for an easy ride to a new Fed chair that's going to cut. The market's worried about inflation, and we got crude. We didn't even get to crude. Shame on me, because the backdrop of it all, how's that? Yeah, crude. 8.8%, up $6. Folks, crude was at $55 to start the year. $55. Crude is up almost 40%, 40% in 2 months. Now, technically, we're right back to where we were in June, where this market rolled over. You take a look at the weekly on crude. Okay, $80. That was the high at the beginning of 25, just over where we were in June. But yeah, it's a dynamic change, folks, and the dollar is showing it, and that is a tough one for gold and silver to get a hold of right now. Okay, look at this weekly on the dollar. It's Tuesday morning. We got some huge weekly candles shaping up with volume right now in these markets. S&P's off by 124. Don't go away, folks. Come right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This portion of the Morning Market Kickoff is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. S&P's off by 1.75% to kick off the trading day. NASDAQ off by 2.1%. You jump over to Europe, and boy, we're down way more than we are right now. You're talking about the DAX off almost 4%. The FTSE off 2.8%. CAC roll off by 3.25%. You jump over to Asia. The Nikkei down more than 3%. The Hang Seng off 1.1%. The Shanghai off 1.4%. So our markets, S&P is, as I said, down about 1.7. NASDAQ off 2.1 right now. You got dollar strength. You got the 10-year at 4.11. Okay, and we are challenging. Lower price, higher yield right now, 4.11. You talk about mortgage rates. We go from a 5.98 handle to now 6.14. Okay, just that quick, right? We were there at the end of last week. We were there, higher price, lower yield. You were pushing it. 3.95% was the number on the 10-year. We're at 4.12 right now. 4.113 to be exact. Pretty remarkable action. And yeah, that is weighing on gold. And if this is going to be a real dive to dollar safety, which it looks to be right now, it's weighing on gold. And don't underestimate the type of reaction. And I'm not talking about $2,000 gold, folks, but this market's ripe for a real correction to the October highs. And I didn't see a full-out war with Iran breaking out that's going to take at least 4 to 5 weeks, if not longer. And yeah, you better believe it. Okay, pay attention to the charts, because not a coincidence we're up 900 and ticks today. When you were up huge yesterday, there is real strength in this dollar, and that is a headwind to gold and silver right now. And until that changes, that's the trend. And the last part about this, not last, because we'll keep talking, of course, but it feels like we've pulled back dramatically in gold, right? It does. For some reason, it feels like we've pulled back dramatically somehow. You've crept higher. You were as high as 54.34 yesterday, right? The Sunday futures open, basically challenging the highs. These are dailies. We're looking at daily candles. Folks, we're at $5,152 per an ounce of gold in U.S. dollars, which are strengthening, okay? I can count on my hands the amount of days in the universe when gold has traded above this price level. Okay, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 10 days in the entire history of the universe, gold has ever traded above where it's trading at right now. So when you look at this market, right, you look at silver, there's this recency bias that silver is pushing $90 or $100. Silver's been above this price many more times than 10. Okay, gold is basically sitting at all-time highs right now, and you have dollar strength ripping into this market. Okay, and maybe that's why. My dad used to say, I don't know why the volume comes in. It's not like they know that there's going to be some type of one-off physical event, right? Whatever it is that comes out of nowhere, but usually they do. And not that the market would anticipate something like this, but boy, when I saw this happen, I saw dollar strength ripping into this market. I was writing the gold report Sunday night, Monday morning, folks, okay? And I was saying to myself, man, my dad, right? Market's job, take the most amount of money from the most amount of people in the least amount of time, right? It'll just feast upon you if you allow it to, because that's the market's job. It finds value, it finds discrepancies, right? It finds a mismanagement of risk where it is, and the market corrects, okay? And as that was unfolding Sunday night, and gold is ripping higher, silver's ripping higher, the dollar is ripping higher, all right, I'm saying, man, this is pretty interesting. We're coming into these highs on much lighter volume with a dollar that's strengthening dramatically, and the type of ability gold has to rip back during the day. So, this is not an end-of-the-world scenario, folks. We got inflation, okay? We have inflation, and Mr. Warsh's job is going to be incredibly difficult to get us back to 2% if that's their job. We're going to talk. The next article talks about core PCE, the Fed's preferred inflation gauge, was ticking up towards the end of 2025, going up. Okay, we're not going back to 2,000 gold, 2,500 gold, but you better believe there's a real risk we go challenge these October highs. Excuse me, back here. Nope, got to back it up. I thought I was on a weekly for a second. Right here, okay? And I'm talking about a high of about 4,400. Look at that volume profile, folks. That thing's ripe for a test. We got a rip lower on this test, dramatically lighter volume on this, and now we have a dramatic strengthening in the dollar. So that's the way I'm looking at this market right now. All right, you got silver at $82. Silver not as pronounced on that October volume, but silver volume's been light. I talked about, look at this weekly on silver, folks, going from $71 the week of February 16th up to $84, right? You were up 20%. You went from 70 to 84, basically. You were up 20% in the price of silver, and you were doing vapor-thin volume. And now, by Tuesday morning, you've almost done as much volume as we did the entire February 16th week. Not quite. But you're at 143,000 contracts versus 210,000. That was a short trading week as well. But you get the point. Okay, the volume's lining up negative right now. And we got a dollar at 99.31 and on the same deal. Okay, look at that weekly. You could take out, folks, imagine, this dollar, realistically, this whole box I had, you could take it all out in 1 week with strength. Right now, you could take out this entire trading range we've been in since April to basically just not including February. That's it. So we have some big action going on in these markets right now. All right, jumping around to individual equity news. Target getting it done on their numbers. Check that out. You give it back a bit. You get the markets down by 1.5% to 3% right now, and you have Target in the green on their numbers. So Target up to 120. You're up to 116 right now. You take a look at this thing on a daily. Let's go back to a weekly, actually. And yeah, I would say this is the bounce, folks. You got some nice strength the week of February 2nd. We're going to pull back. We're going to bounce higher. We'll see how today goes. But I jump over to target shares real quick, and we're going to come back and talk Fed and talk Mr. Warsh's path and the difficulties that go with that path in terms of cutting. But Target, upbeat forecast, improving demand. Yeah, earnings per share, $7.50 to $8.50. The company said, strong guidance. Healthy positive sales increase in February. How about comp sales slowdown? Yeah. Comp sales, same-store sales, down 2.6% last year for Target. They got a new CEO. It's going to increase capital spending by 25% to $5 billion. Its beverage section. Toys, video games, and sporting equipments have also ramped up. Target shares trading higher this morning. Markets in the red. We're coming back for the opening bell, folks. We'll take a look at some equities. We'll talk some core PCE and Mr. Warsh. We'll come right back.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We got equities open. S&P's open the session down 1.6%. You know, folks, you take a look at a weekly, right? I mean, Basil Chapman, he's coming up next with the Tiger Technicians Hour, but you don't have to be a technical genius sometimes, folks. Just the natural progression of things. We got a rolling over in this market right now, okay? Now, we got some nice volume the week of February 2nd. which is basically right at the highs. We hit a high there of 7,027. The prior week, we were as high as 7,043. But we got a rollover going right now. And as I mentioned, you're breaking below this potential area. Next stop is the lows here. And that lows, folks, 250 points in the S&Ps from where we're trading at right now. NASDAQ 100, you got a similar rollover. Okay, and those lows from November, 23,904. So you're talking about 600 points right where you are. All right, let's take a look at some equities for our man Darth in the Tiger's Den. Riot. So we're talking some crypto here, right? Riot. Was this Riot blockchain? Is that what it used to be? And now it's Riot Platforms, I believe. Operates as a Bitcoin mining company in the U.S. Operates two segments, Bitcoin mining and engineering. They got facilities in Rockdale and Navarro counties, Texas, and two Bitcoin mining sites in Kentucky. This is a $6 billion company, folks, Riot. Yes, $5.7 billion company. All right, we take a look at this thing. You know, when I was looking at this, Darth, the run up here, you know, when I'm looking at price and volume, that's the reverse of how you like to see it here. You know, in terms of on this run up it had towards the end of 2025, every time it got higher, they got a little bit less volume, a little bit less volume. You don't have a ton of selling, but you don't have the strength on this bounce either. And realistically, you have some strength right here, but as you traded higher, you didn't have that strength. You know, if I'm trading these cryptos, I think I'm just trading the cryptos themselves. That's what, you know, you can trade iBit if you want Bitcoin. There's leveraged ETFs out there, but at least you have some semblance of the underlying versus some of the risks in some of these equities that you're into. And let's check out Core's. Okay, Core Scientific. What's this one? This one's a $4.7 billion company. Digital asset mining services. Let's take a look at this one for volume. Okay, we had some strength in October. You did have some nice strength at those October highs. Hey, if I had to pick between the two, I would definitely pick Core's. I would. You got some nice strength at the highs. Not a lot of selling. We had some selling here in December. We need some more strength. You know, I would encourage you to put stops in these if you're in these no matter what, though, folks. Like, you know, if you're trading Cores right now, you know, do you really want to let this thing go far below the lows of the lows of 1412, which is the week of November 10th on that initial pullback, right? This has built a nice floor for November, December, January, and February. 4 months, $15 has been the floor here. You break below there, you can be back at $6 in no time. So when you're trading super high risk equities like this, when you're talking about Bitcoin mining operations, it's a $6 billion company. You're down by 6.5% today. Okay, Bitcoin's down by 3.4%. You know, you jump over to the MicroStrategies of the world. Stay away from this one, folks. Doesn't mean it might not be back up to 500 before you know it if Bitcoin catches a bid, but I just don't like trading in vehicles where I have no idea the financial backing and how it's going to work if things fall apart. And the share price has reacted as well. You know, you're back in this consolidation from 2024 in MicroStrategy. Be real careful of those ones. All right, let's see how Target opens on their numbers. Target up by 2.2% on their numbers right now. We check back in on yields. Holding steady at approaching 4.11 on the 10-year. We check in on the dollar, driving a lot of action right now. Yeah, look at that. We just hit a new high on the dollar, right on the market open of 99.40. Gold challenging the lows off 3.4%, off $180. Folks, gold's down $300 in 24 hours, folks. Okay, I always say protect yourself. Put a stop in. I'll tell you, we had one trade open in the gold report, okay? And we got stopped out exactly on the open yesterday. We kept it tight, okay? I encourage you to keep them tight. We're going to have plenty of opportunities here. It's been a heck of a run up. Don't risk a lot at these highs. Gold's off $300 in 24 hours. And silver right now is off, what, $14 in that period of time, 15%. And what really makes it worrisome is just the lack of volume that we've had entirely from this bounce, right? Silver got clobbered from 121 down to $70. we never had a sign of strength on these bottoms, folks. So get ready for a pullback that we haven't seen in 2 years. Okay, it doesn't mean it has to happen, but protect yourself. You know, we've had some positions in the gold report. What's remarkable is, right, the run has been so extraordinary. It has. Okay, I had just gotten stopped out within the last 6 weeks, maybe 8 weeks, for multiple positions of 30, 40% winners. And it's just been so volatile over that period of time. You have the feeling that you can't miss out. And I encourage you folks to think about, just like I said at the start of the show, gold has only traded above where it is right now on 10 trading days in the history of the universe. We are at all-time highs above 5,000. We have not pulled back in this market in years. Look at this chart and realize that it's Tuesday morning right now, and we have a weekly bar forming that stands out on this chart already with about 3.5 trading days left. So protect yourself, all right? There's no harm in putting a stop in there, getting ready for the next run, and we can always change on the other side. Well, folks, watch that dollar, man, because that's a big move, and that's what I'm watching this morning, and I don't think it's surprising we're down by $300 in 24 hours in gold. All right, let's check in on the big dogs. NVIDIA, down by $3.40, off 1.9%. NVIDIA had a nice day yesterday, up by 3%, giving back a lot of those gains. Amazon, down by $4.45, 2.2%. Microsoft, it's a nice open on Microsoft, only down by 0.8% right now. Meta shares, there you go, off by 0.5%. We jump over to Walmart. They get a nice bounce following Target numbers. There's Target up by 4% almost, 117.28. We jump around to some more retail. TJX down 0.9%. And Kohl's down by 4%. Oh boy, okay. So much for the Kohl's rally. You talk about volatility. $6 to 25.1488. All right. And as we were talking about, so Mr. Warsh, okay, the headline, even before he reaches the Fed, the path to rate cuts is getting tougher. Now, the part I wanted to talk about here, all right, and this is going to be the most important part, the Fed's preferred inflation gauge. This is U.S. core PCE. Folks, look at this number. Since June of 2024, we're approaching 2 years of core PCE at almost 3%. And where were we in December of 25? 3%. That's inflation. We'll come right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening Call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at direction.com. Read carefully. Distributor Foreside Fund Services, LLC. Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. We got the S&Ps off 120 points right now, 67.66, just off the overnight lows of 67.42. NASDAQ 100 off by 1.9%. The Dow is approaching 1,000 points lower, off 1.99%, 976 points, and the Russell off by 3.25%, right at the lows of Sunday evening for the Russell. And how about the Russell? 90 points up. Folks, that's almost a 4% way up and 4% on the way down. 4% on the way up, 4% on the way down in the span of just over 24 hours. That's indicative of a market that is very unsure of how to price in the risk going on right now as the Dow goes off 1,000 points lower. S&P's off 123. Okay, jumping back to Mr. Warsh's difficult nature of how he's going to get cuts into this market. Now, the Fed prefers the U.S. core PCE. This is not even including oil. This does not take into account energy, right? It doesn't take into account food and energy. I'm not asking. The Fed says they want to get back to 2%, which is the dotted line here. Folks, you don't have to be a genius to know that there's no way we're going back to 2% right now with the way this chart looks. It's not like we're taking a little while. We've stopped. Numbers are actually going up. We were at 2.8% in May of 2024. That's basically where we've been for 2 years. And we're no longer cutting. Now we're no longer hiking. We're no longer pausing. Now the market wants cuts. Well, we might have to hike. Okay, they started talking about that in some of their meetings, that they gave a nod to the potential for dual risks on both sides of the inflation and full employment mandate. But yeah, that's a 3% number, and that does not include what just happened with crude. Okay, so core PCEs going up to 3%. That's inflation, folks, no matter what you hear. And then you take a look at crude. In terms of where crude was, as crude continues higher, we're now above $77. So I just gave you the numbers for where we were in December of 2025. Well, guess what, folks? Crude was trading at $57 a barrel while we had core PCE at 3%. Crude's now trading at $77 a barrel. It's up $20 a barrel. Okay, 34% crude is up during that period of time, combined with a core PCE that's up 3%. And you look at, so Mr. Warsh was nominated about January 30th, right? It's been about a month after the president put his name in for the nomination. He has to go through the formal process with the Senate. A month ago, what we're looking at here is the probability priced in of where the Fed's going to be on Mr. Warsh's first meeting, which is June 17th, okay? Chairman Powell's coming up 2 weeks from tomorrow. His final meeting's April 29th. The new Fed chair is supposed to take the helm in May. Their next meeting, June 17th. The odds right now, folks, are a 2-to-1 probability that even when Mr. Warsh is the Fed chair, we are still going to get no cuts. Now, remarkably, that number has moved a lot even in the last day. Right? Yesterday, there was only a 54% chance that they stay where they are by the time Mr. Warsh takes control and has a June meeting. Today, that number's at 64%. A month ago, the market only gave a 44% chance that we get no cut by June. Today, it's at 64%. So, yeah. And the other thing they talk about in this article, productivity. Okay, are we really going to get that productivity? Because guess what? In terms of what we're anticipating, labor productivity over the past decade, economists are only looking for a 1.8% gain in the fourth quarter. Well, we'll see what happens. If we start getting layoffs like Block, where they lay off 50% of their workforce and the equity goes up 10%, and they say they can do the same work, okay, that alone, Block laying off 4,000 workers, they're going to have almost the same level of productivity. That's what they think in terms of company-wide for half the workers. And then, of course, you get the balance sheet and what they're going to do with the balance sheet. And Mr. Warsh, how he wants to balance that balance sheet. But, yeah, this market cannot find a bid right now. Dollar's got King Dollar written all over it to 99.37. And listen, even if this is a short-term scenario, right? And I'm talking about short-term for a month or two, a few months. There is a real problem when you talk about inflation at 3%, yields going higher, the Fed unable to cut, and the risk that relies in that with the runaway debt. As we have a 10-year yield of 4.1% right now. Check back in on metals. Can't help but keep our eye on it. Oh, here we go, folks. Yeah. Look at this. Okay. Whew. Gold just broke lows. Gold's down almost $400 from where we were barely over 24 hours ago. I mean, imagine this, folks, okay? Just to give you the context, people are just over their skis on some of these trades. Okay, if you are over your skis, if you have too large of a position, okay, that you don't want to take a 10% pullback in silver on a daily basis, then get out of the market, folks, because this thing can be at $70 just as quick as we just went from 90 to 80. I mean, where do you find a floor in a market like this? Let's take a look at the heat map in this market right now. Whew, that's a tough looking S&P 500, folks. What do we got on the greens here? Target, one of the few green lights here. Costco's up a percentage point. Verizon and AT&T in the green. Palo Alto's barely in the green. Adobe as well. Look at these chip stocks. Micron's off 7%. Intel off 6%. These were the stocks plowing this market higher. Nvidia off 1.8%. Dell, SanDisk off 7%, Western Digital, Seagate, Oracle off by 3%. Protect yourself in this market, folks. Easier said than done. Get a plan. Okay, if you're in some of these metals, get a plan. Don't just play this thing day by day, because we got quite a market cooking right now, and make sure you're protected right now. You're the DAX, down 3.7%. The FTSE's off 3% right now, folks. Okay? S&P's right now off 2%, 67.49. And this market cannot find a bid right now. And they're selling everything. Oh, man, look at this. Gold's off more than 5%. Okay. We got quite a market, folks. S&P's off 140 points. NASDAQ off 527. Metals getting clobbered right now. We got the VIX. VIX. Coming back near the pre-market highs, 26.54. One more segment, folks. We're coming right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We got the S&Ps off 1.96%. You just hit a low there of 67.42. We're just off that level. You have lows from early February of 67.51. So we're right there within about a couple points of that huge acceleration. The move lower, the bounce, we're going to have some volume today. That's for sure. We're already at 732,000 contracts, and we're not even 30 minutes into the trading day. NASDAQ 100 off by 1.9% as well, just off of the lows. The Dow off 1,050 points, and the Russell leading the way off 3.6%, off 94 points. The 10-year at about 4.1%. We were sitting at almost 3.95. The dollar driving a lot of the action right now. And look at this, we just hit another high. All right, 99.41. We're just off that level right now. The dollar is up a full point. There it is, a full point from where we were yesterday. Exactly, the dollar. We're at 98.38 yesterday. We're at 99.38 right now. And boy, quite a day in metals. Gold just hits a low of 5,025. more than $400 off where we were overnight coming into Monday morning. You got gold off by almost 5%. Silver down $9 or 10.1% for silver. Platinum off 12.8%. Copper off by 2.6%. And yeah, no matter which ones you're picking, okay, you pick these First Majestics off almost 15%, folks. Okay, Endeavor's off 13%. Hecla's off 15%. Protect yourself out there. This market's moving quick and people are liquidating when you got some of these equities down 15% in a heartbeat. Folks, thanks so much for kicking off your trading day right here with me on the Morning Market Kickoff. Stay tuned. We got our man Basil Chapman coming up next, the Tiger Technicians Hour, folks. Steve Rhodes at 11, Fast Market at 12, and I'll see you this afternoon. Get a plan out there. And as you said, Duffy, that's right. Sell when you can, not when you have to. Our man Dave White, always miss him for sure. And that's the truth, folks. Get a plan. Don't get squeezed into that corner when the market might be moving faster than you think. Get a plan right now so you don't have to make those decisions when they come. A lot easier to pick that level right now, right? Where are you? If you're holding it, you're in the market, you got retirement money, that's one thing. You're trading this equity market, get a plan, get a stop. We are moving quickly. S&P's off 2%. Stay tuned, folks. Basil's coming up next. Have a great day.